Very good afternoon. You're watching the newsroom right here on ET. I am Ajay Sharma, and look at the markets right now, trading at day's high. Mild gap down and indecisiveness, but then after that, a big short covering bout, taking the Nifty above the 17,200. Bank Nifty also powering ahead. Mid caps are very active. We have Amisha Vora of Prabhudas Lilladher to talk more about markets. Amisha, thank you so much for your time today. It's a good day to have you. So, can you tell us what does your sense is now on the market? You've been around for such a long time. Leave the the data and the Excel sheets on the side for once. Purely from your experience, can you say comfortably right now that a bottom is in place now that Fed cycle perhaps maybe nearing an end, or one should not be taking that for granted and it's still open on the downside?
So I wouldn't say that the bottom is made. Rather, I would make a statement that here on, higher decline is the right strategy. So I still feel that the uncertainty and volatility in markets will continue. We have not reached a stage where both in terms of fresh news or in terms of market levels that it is a very solid grounded bottom, having spent a lot of time at that level. But in the short term, also that I know that there are a lot of shorts which are created in our markets, and the ratios are so much tilted in favor of a relief rally at this juncture that anything which triggers a relief rally will lead to a slightly more bounce in the markets.
Hmm. Okay, so you're saying that from here on, declines should start. You should be buying the declines from here on. So that is also kind of saying that you're very constructive on the market. What are the factors which is making you constructive? If I take a 6 to 12 month or beyond kind of a view.
So one of the reasons is that we already have spent at this level of around 17,000 more than 1.5 years, which means that over this 1.5 years, whatever is the growth in earnings, we are getting that at a reasonable valuation from a 21 and a half times multiple, which was at a premium to your last 10 years average. Now we are closer to 17 and a half times, which gives us little cushion in terms of the valuation comfort. Also that we are sitting on the back of a huge FII selling, and a repeat kind of such a large FI selling over a sustained period of 6 to 12 months I don't foresee, because I feel that over 12 months it will be, the trend will be emerging markets as compared to developed markets. So not undermining the likely volatility which will we can still see, both because of global factors and our domestic factors, if at all of El Nino and slightly slowdown in consumption. I feel that it could be a buy at decline market from now on for quite some time, because as an economy, I think still we are doing one of the best, both in terms of macro, that is inflation and inflation outlook, as also in terms of micro, when companies' balance sheets are much more stable and healthy.
Right. Amisha, what is making you comfortable for purchases in the mid cap, small cap side of the market? Because that has really taken it on the chin. Any theme that you like there, and what are your thoughts in general about the small cap market?
So one will have to be very selective on two counts. Whenever the interest rates rise, which is what has happened to some extent in India, as also the liquidity reduces, it is the mid cap and small cap companies which find it really difficult to navigate these times. So the management bandwidth, so to say, is slightly limited in these segments as compared to the large cap. Number two, also that markets are not, particularly in mid cap, small cap, when we started the rally, we were at, say, TTM 12 times kind of a PE. Now we are at FY25, 18 to 20 times PE. So we are not buying anything cheap in mid cap or small cap as such. So selection will be very important. Bottoms up will be very important. And the whole focus should continue to be buying franchise business with cash flow generation.
Hmm. Let's talk about some specific areas of the market. What themes are you liking right now? Anything in auto and auto ancillary? Some name which you may your house may be bullish on.
So particularly in auto ancillary, I don't think that anything very aggressively that we are pushing at this juncture. Not that we are bearish too, but within auto, yes, we still continue to like Mahindra and Ashok Leyland.
In the manufacturing theme, which side of the market do you like? Do you like electronics manufacturing, capital good manufacturing, chemicals, apparel, anything in manufacturing which you guys have really studied a lot and recommended to your clients?
So in manufacturing, we like first and foremost still defense the most. We feel that the kind of game changing policies and order book which are flowing in defense, their defense stocks will continue to do very well over next 1 year, 2 year, and most likely 3 year period and beyond also. We also like the theme within that of uh, IoT within the plants or automation within the plants, and the market leaders Siemens and ABB are really there. So while the new capex on ground from private sector is still limited, the spending on automation and plant productivity and efficiency is improving big time. And so Siemens and ABB in large cap continue to be our favored pick. As we move forward, we know that one thing wherein spending is really happening is infrastructure. So a combination of infrastructure and defense and actually the real estate also, Larsen continues to be a very attractively priced large cap play, and that also we like quite a lot.
What about consumption? There's a new variety of stocks. Food tech, Jubilant Food, Westlife, or even some of the other Devyani, Varun Beverages. That the entire consumption basket of new sorts seem to have excited one part of the market a lot. Do you like that? Do you see any of the names worth investing there?
So generally these are very good franchise, particularly QSR as we all know it, and as more and more people work as a family, spend on Swiggies and eat out, I think this trend as a percentage is still very limited and long way to go. But having said that, we've been seeing in performances of late that same sales growth, break even on new stores, and the overall demand is slightly slow in last quarter and it's expected to be the same in the current quarter. So from a very long-term perspective, yes, QSR franchises are a must in the portfolio. But having seen the run-up in the stock, will they really perform hugely in the short term? I think they will consolidate for some time before they start appreciating again.
Amisha, what are your thoughts on the end of the market which gets impacted because of higher interest rates, especially the real estate basket, I would say, and also NBFCs which cater with home loans and discretionary consumer loans, because there is early signs that some amount of consumption has been impacted. Do you like NBFCs, retail NBFCs or home NBFCs or even real estate companies?
So frankly, I've been telling for quite some time that last decade was the decade of NBFC when banks were busy putting their house in order in terms of both their asset quality, capital, and so on. And at that time, NBFCs had a free run in terms of capturing market share. As we see now, banks have a fantastic balance sheet, technologically also much better, and the uh, low cost at which probably the NBFCs were getting funds, that era is also coming to an end. So comparatively, instead of buying NBFCs at 3 to 6 times price to book, I would still at this juncture prefer banks at between 1.5 to 3 times price to book, depending of course on the quality and the franchise. And I think that this decade banks will do better.
Any last question? I would like to understand from you any last calls which you can share with our viewers in terms of your top 2 3 bets at this juncture.
So from long-term investments perspective, I think that having been declared the merger finally been approved by RBI between HDFC and HDFC Bank, investors with little patience should go for this franchise for sure, I think, because the cross-selling opportunities that will emerge from this merger will be immense. And that is one thing which is not capital sucking and that helps improve ROE. In the short term, yes, there can be management integration issues. There can be issues related to the CRR, SLR compliance requirement and additional deposit, but that is very transitory. And I think that this is going to be a behemoth franchise and the cross selling will lead them to a very good growth. So this is my first pick and a very strong pick because the stock has not just performed at all in last maybe 12 to 15 months, and over next 24 months I think this franchise will really perform very well.
All right, always a pleasure chatting with you. Thanks so much for your time today. That was Amisha Vora of Prabhudas Lilladher talking about how she's approaching the market and her favorite ideas. Take a short break.